But let's take that discussion forward. And to discuss the outlook on base metals, oil market, as well as for gold and silver, we now have Mr. Ajay Kedia, MD and Research Head at Kedia Commodities, now joining us. Mr. Kedia, thank you so much for taking your time out and joining us here on ET Now. And first question will be on gold and silver because they've retracted from their all-time high levels. Gold is now down nearly 2% from its high of $3,167 per ounce, and silver also fell nearly 7% yesterday. What's your outlook when it comes to gold and silver? Do you believe the best of upside that we saw in the last calendar year and this year is perhaps behind us now?
Very good, Afghan. So I think no doubt after the yesterday's fall, all are questioning whether this rally is stopped. Almost we have seen a 40% gain in gold prices in last financial year. But I think the factors like geopolitical tension is as it is it's going on. Let it be Iran, US-Iran concern, Russia-Ukraine concern, China-Taiwan concern. Everything is in place. Central bank buying continue to be there. ETF buying continue to be there. De-dollarization continue to be there. I think yesterday post-tariff there was a we can say concern was been there how the tariff would be moving and that has triggered off and that is why there was a profit booking. One more thing is a post-tariff implication. Everyone is expecting there will be a hike in inflation where 2.8% is right now. The inflation in US may go beyond 4.5 level, which can again attract gold as a important inflation hedge commodity. But other side, prices has been under pressure after the speculations going on in the market that up till now, since second half of 2024, where interest rate was been under cutting pressure from central bank, but now it could be a pause. And that is why there was a slight fallback. So I think maybe after the yesterday's turmoil, we may see another couple of days prices can come down. Gold, especially, we can see level like 3,000, 3,020 as of now. Immediate support seems to be over there, unless and until some new trigger doesn't come. But in case of silver, there are multiple triggers that has created more pressure. First of all, silver has failed to cross $35 mark, which was the last high. Secondly, gold-silver ratio has breached the level of 92, which is a 3 years high. Right now, it's going on. Whenever gold-silver ratio goes up, that means concerns are being there in economy and silver will be underperforming. Because of this tariff, industrial demand will take a hit, and that is why silver has dropped more than gold. And right now also, we have seen almost 8% fall. I think it can go up to, let's say, 10 to 11% fall from the high what already we have seen. So I think silver may underperform for next let's say 10, 15 days. After that, that should be a value buying. But as of now, definitely gold and silver would lose some of its gain what up till now we have seen. But long-term scenario still remain bullish.
Bullish, but over the short term perhaps we could see some kind of downside for both gold as well as silver, and silver could perhaps underperform for the next few months. But that's as far as precious metal market is concerned. Also wanted your thoughts on Brent crude. We had some important commentary that came in from OPEC Plus, because of which supply could increase in the global market. In fact, Goldman Sachs has given a target of $69 for this year and $62 per barrel for the next calendar year. Would you concur with this view that perhaps there's more downside left when it comes to Brent crude?
Not much downside we can say, because in last couple of years we have seen many times Brent has went to the level of 65, 66. But at that time we will see the production cut is started. Another thing, no doubt, as of now we know that global economy is facing a recession fear. Up to last month, there was a probability of recession around 15 to 20%. But with this tariff implementation, its probability to US going in recession would be around 40%. And that is why we have seen this fall in Brent crude price. Secondly, the OPEC hike, because since last couple of years, OPEC was trying to increase the output, but economy was very fragile. But now I think things have been in line pre this COVID, pre tariff situation, and that is why they have taken this decision to increase their output by 411 K barrels, we can say. So as of now, we can see a pullback in pressure in Brent prices to the level of, we are expecting around 65, 66, not beyond that level, because from lower side, there could be a low level buying again. But yes, as of now, we may see level like 65 for Brent.
Okay, $65 per barrel, that's the level to which Brent crude could fall in the global market. But also wanted your thoughts on China, because China has been working hard to revive its economy, and at a time like this, US has now imposed a total tariff of what, 56% on China. Do you expect that the revival that Chinese government was working on will be slower, and will this have an impact on steel demand and iron ore demand consequently?
Yeah, definitely. See, if we see on front line, definitely it could be impacting. But we know China very well because in the first term of Donald Trump, they have handled handled Donald Trump very well. They know how to handle this thing, like we can say devaluation of their currency or finding the other partner. So maybe we have seen copper import in US was quite high. Aluminum was facing the supply side concern. That is why in the month of January, February, March, we have seen a sudden jump. But as of now, there could be a temporary fall, maybe another, let's say, 4 to 5% fall, maybe possible. But China is totally prepared for this thing. Maybe some stimulus hope can be possible by this month and from China, which could halt this fall. So I'm not so much bearish as of now. Prices has already discounted copper. Let's say right now prices are around 93.50 level, maybe a base to be around 92 level on LME. Zinc, already we have seen prices has dropped significantly on domestic side also. Maybe a support like 240 could be possible. So temporary fallback could be possible for next 15-20 days as market will readjust them regarding the demand. But I think when the economy has to grow, then we need a base metals. So I think temporary there could be a fall of another 3 to 4%, but not beyond that level. China is preparing to handle this situation. They know very well how to handle Donald Trump. Last time also we have seen same.
Understood. So China is preparing itself to handle the situation well, and that's the word coming in on what the outlook is for the commodity market. Mr. Kedia, thanks so much for joining us with all those details.
Thank you.
But
if you like this video, then like, share and subscribe to ET Now.